What's going on? Welcome to Trading in the Trenches. Today is September 20th. It's a Saturday. It is 3:39 p.m. I'm going to do an in-depth weekly watch list for you guys. All right, so the first page I have pulled up here is forexfactory.com. I use this website to get my news, to find out overall what's happening for the week coming up. All right, so let's get it started. Monday, the 22nd. There's news coming out, but basically the only news I pay attention to are red folders like this. This one doesn't matter particularly because it's GBP, which is the Great British Pound. I'm looking for USD since I am here in America. All right. There's an orange folder here, but I don't care about orange. I only care about red. Tuesday, September 23rd. Look at this. We got the flash manufacturing PMI, flash services PMI, and the one that matters to me, Fed Chair Powell speaks at 12:35 p.m. on Tuesday. So I'm expecting a lot of volatility for this. Let's see what this flash manufacturing PMI is. This measures the level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. Okay. Why traders care. It's a leading indicator of economic health. Businesses react quickly to market conditions, and the purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. All right. That's the flash manufacturing PMI. Flash services PMI. It essentially says the exact same thing, so that's not really helpful. What I would say is important to note is that by 9:45, volatility should be hitting the markets for these red folders. So 9:45, 10 a.m. we got this orange folder, and then 12:35. So Tuesday is going to be a high volatile day. What that means to me is day trading on Monday is a go, and I don't want to be holding anything overnight. All right, let's see what's going on Wednesday. Nothing's going on Wednesday. Thursday, final GDP quarter over quarter and unemployment claims. If you've been following the news, you know that the unemployment numbers have been falsified over the past 4 years, leading to an actual deficit of 1 million jobs or so. So, final GDP quarter over quarter. Why traders care. It's the broadest measure of economic activity and the primary gauge of the economy's health. It doesn't state it here, but I also believe that the final GDP is it has a bigger impact on whether rates are going to get cut than CPI or PPI does. And then Friday, we got core PCE, personal consumption expenditures. Maybe this is the one. Yeah, it differs from core CPI that it only measures goods and services targeted towards and consumed by individuals. Prices are weighed according to total expenditure per item, which gives important insights into consumer spending behavior. CPI is released about 10 days earlier and tends to garner most of the attention. Here it is. It's the Federal Reserve's primary inflation measure. So this is the one. Not the GDP, but the PCE. There's so many acronyms here, man. Inflation is important to the currency. Yeah, we understand that. So PCE gives the Fed more insight onto whether they'll be cutting rates than CPI or PPI does. So we got Friday heavy news, Thursday heavy news, and Tuesday heavy news. Probably won't be the best week for swing trading. All right, let's close this window. FinViz. This is my favorite tool for screening. So I'm gonna show you guys typically I already have my watch list set up, and then we just go through the stocks. But I'm gonna actually pick stocks today with you guys, just because I got the time to do so. All right, a lot of ads on this thing, especially the free version. So bear with me, guys. Okay, my first filter is gonna be right here, return on equity. Oh, look, it tells you it's a measure of a corporation's profitability that reveals how much profit a company generates with the money shareholders have invested. So it tells you what the company's doing with your money if you're invested. I want to see at least over 10%. All right, so they're at least turning a 10% profit with people's money. Analyst recommendation. I want to get a hold or better. All right. Next, we're going to do the 52-week high or low. Because of my trading style, I want to see that the price is between 0 and 10% below the high. All right. My trading style is looking for trending stocks near their all-time highs that are forming bullish-looking patterns, bull flags primarily, and then getting in and riding it up to new all-time highs. Average true range, ATR, I want to see at least over 1.5. I want to be in something that is moving. All right, I don't want to be in a stock that moves 20 cents a day, unless I believe that a big move is coming and I'm looking for really, I guess they would call it a gamma play. If you guys hear a lot of background noise, I'm outside. Typically, I'm doing my videos inside, so we're gonna find out how good this microphone is today. All right, price, over $15, all right? So I want an ATR of 1.5, moves at least $1.50 a day, and the price of the stock is at least over $15. I'm gonna move over to the next column. Option short, optionable. This is my bread and butter. I trade options. I don't want to buy the stock and do nothing with it. I want to get something that I can buy the option and leverage my money. Average volume, over 500K. I want liquidity. The bid-ask spread, I want it tight. I don't want to lose $100 entering and exiting a position. So we need liquidity. We need the average volume to be over 500K. All right. Next, what's next? Cha-cha-cha-cha-cha. Next, we're going to go skip this column right here. EPS, earnings per share growth quarter over quarter. EPS is the portion of a company's profit allocated to each outstanding share of common stock. EPS serves as an indicator of a company's profitability over 10%. And come on, man. Sales growth quarter over quarter. Are they continuously selling more every quarter? Right? Quarter over quarter growth compared on a year over year basis. Over 10%. I'm not going for the big dogs over 30%. I just want them to be profitable. And last but not least, I want it to be an American company. No, I'm not afraid to trade German companies or Chinese companies or Indian companies. However, I want to trade American companies. All right, so now we got 4 pages of data. Then I'll click on the charts so I can see what the charts actually look like. All right, and then I'm going to look for what appears to me to be a pattern that I like, and then I'm just going to write down the names. All right, so what we're going to do, I'm going to pull up a notepad. Here we go. And I got a new note here. So I like ADSK. All right, ALAB. Let's see. I'll check out Amazon. Why not? Amazon we know is highly liquid. ANET. I don't like BLBD. I don't like it because it's been in this consolidation period for a very long time, right? AVGOs, it's coming down some. I'm not I don't like that too much. You see, this thing has kind of gotten stable. It's gotten stable. This one also, like they've found support. This one looks like it's on the way down. Not a big fan. Like boots going kind of down. BX, it's decent. I would like to see a bigger pattern of consolidation underneath that high. CBOE looks like it's consolidating to go down. CBRE has been in this consolidation for a while. Just going through my thoughts as I would look at this by myself typically, but just sharing with you guys the process. All right, let's go a little bit quicker. No. CVNA is not horrible. I like that this looks like a cup, maybe a cup and handle, and then something bullish comes out of that. CVNA. I'd like to see a longer little consolidation here. Maybe there's something like a little day trade or something. Let's see what happens with FTAI. Oh no. This thing is, whoo. Look at that, $30 move. That's beautiful. No. Meta's got a little cup going. Let's write that down. I'll take a good cup and handle shape. All right, page number 4. Come on with these ads. No. It's not quite a cup, so I'm gonna leave that alone. MU, I would like to see a longer consolidation period. I'm just gonna write it down so I have it on the watch list because I've been highly successful trading MU. Nvidia. I'm gonna leave it alone. All right, page 5. This one's got a little bit of a cup coming here, right? Let's write it down. Why not? PSIX. No. All right, last page. No. Oh, this one I like. It's got a cup, right? Look at that. VRT. All right, cool. So we got our list. Now we add them here. Let's see. ADSK. Let's see if I can remember some of these. ALAB, AMZN, CVNA. What else we got? ANET, FTAI. ANET, FTAI. Meta, MU, PSIX. Meta, MU, PSIX. VRT. I think that was it. Yep. All right, cool. Done with that. Done with this. Garbage. Boom. So that's basically what I do most weeks that y'all don't see. All right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Cool. I'm going to come over here on Thinkorswim. Cha-cha-cha, Charmin. And I'm going to make the same watch list. All right. So let's see if I can. Let's see if I can do this with both screens open, right? Create a watch list. Watch list name 920. All right, ADSK, ALAB, AMZN, CVNA, ANET, FTAI, Meta, MU, PSIX, VRT, and let's save that. Bam, 920. Cool. All right, so we got some setups here for sure. Let's go through. Let's go through this thing and see what's going on. Yeah, what is that noise? I don't know if you guys can hear that noise. I hope not, because it's annoying. Sounds like a computer or something. Anyways. All right, this is Autodesk, ADSK on the monthly. Let me go over these indicators. Let me just show them to you guys, right? So I don't use the volume. This is traditional volume down here at the bottom. I just turned it off. I use the VRVP for volume, visible range, volume profile. Those are these bars on the side here. I got the 34 EMA, 21 EMA, Keltner channels with a multiplier of 3, 8 EMA, DTR over ATR. That's this box down here. Essentially, it tells you the average true range. In this case, is $34. And then it shows you how much the stock has moved that day, $16. And then it gives you a percentage. So you know, okay, it's moved 47% out of its average movement span. So if you're day trading, this kind of gives you an idea of how much the stock could possibly move from the time you get in to the rest of the day, assuming it hits 100%. Okay, and then we have Keltner channels with a 5 multiplier. All right, and then we have down here the Squeeze Pro, which is just the TTM squeeze. So those are all the indicators. How do I use them? Really quickly. These are basically resistance points that I use, right? So when price gets to 3 ATR, you see it tends to come down, 3 ATR, come down, 3 ATR, come down, 3 ATR, right? And then occasionally it gets to 5 ATR when it really wants to run crazy. And when that happens, you know, these areas where I'll take profits or combine that with like a Fibonacci zone for greater confirmation to take profits. All right, that's enough of that. So this monthly chart looks good. Weekly chart looks good. And the daily chart looks good. When I say looks good, specifically, I mean that where the price is currently, there's space or room to run between where we are and where the 3 ATR is. As you can see, when price gets towards 3 ATR, right, it pulls back. So I want to make sure that when I'm going to enter a position, there's space between where price is currently and the 3 ATR level. So ADESK looks good. Let's see ALAB. ALAB, this is a new stock. They've only gone public since last March, and this thing has been on a tear, right? Just out of curiosity. Since July, this thing is up 200% in 63 days. That's beautiful. So this thing is obviously still establishing itself. You see it's up here, 5 ATR, and the week, it didn't close up there. It came back down a little bit and closed here. So there's always something like that going on, right? Look over here, it got up to 5 ATR and then pulled back. Got up to 5 ATR and then pulled back a little bit. Just to show you guys why I use these indicators and how I use them. Okay, the daily chart. All right. It's got space. Amazon, it's got space on the monthly. It's got space on the weekly. And it's got space on the daily. I really like this daily chart, by the way. Probably going to do a setup on that. CVNA, not too much space, but enough. The weekly, definitely. And the daily, for sure. And it has this, what I call cup, right? Only thing it has to do is make a handle. All right, so CVNA is interesting. ANET, let's see. 1 month, not so much. The weekly's got about $6. What about the daily? The daily's got some space. All right, this one's not terrible. I'll leave it on there. The monthly on FTAI has space. It's been a great month for it's been a great 3 months, right? 66% in 63 days. This thing has been moving about 1% each day. The daily is right up there at 3 ATR, and the weekly, I'm gonna have to cut FTAI. Meta. The monthly's got some space. Weekly's got some space. And the daily has plenty of space. I like that. MU. The monthly's up. Not super up to 3 ATR, but it's close, right? The weekly is through its 3 ATR, and the daily is up at 5 ATR. Oh, no. This is it right here. I was looking at this candle. So MU has some space on the daily. I don't like where the weekly is, and the monthly's got a little bit of space. Just out of curiosity, let's see. So this thing has a target. Look, and this is the other stuff that's interesting, guys. Where the 3 ATR is happens to line up with the 1272 retracement level, right? Right here, 183.65, 183.52. So we call that confluence, or multiple signals leading to a higher probability of something happening. In this case, that would be the price coming up to here. So I like that. I'm gonna leave MU on. This is the monthly on PSIX. It's through the 3 ATR. I don't like that. The weekly's got some space. And the daily has, $3. And this thing's already firing. Firing long, which is great, but it's firing. When I say it's firing, that means that these red dots down here have turned green. So once they turn green, the setup is no longer valid. You want to ideally buy when the dots are red and prices down here between the 21 and 34 EMA. When I say you, I mean me, because this is my style of trading. Let's see. Let's dig deeper. See if we find something here. 30-minute? No. Okay, here we go. So I like this chart, this 15-minute chart. Because of all the news going on this week, this might make for a good day trade setup or overnight trade setup. Let me see again. What was the monthly? The monthly is through it. All right, I don't like that. And up here, there's a lot of pressure. And the weekly's got space and the daily's got space, right? All right, let's check out these options. PSIX. All right, so they got monthly options, which is not my favorite. I don't like this bid-ask spread. So let's explain the bid-ask spread, right? Since we're doing an in-depth video, we got some battery power. So the bid here is $8 for these at-the-money calls, and the ask is $9.60. Okay? What that means is that the bid-ask spread is $1.60 in premium. which is $160 in US dollars, which means that just for entering and exiting this position, you are going to lose $160. How does that work? Well, let's say you get in at the halfway price, which is $8.80. When you get out, the mark is going to be also somewhere in between. And so essentially when you get in and you get out, that extra 80 cents, you lose it. Versus if the bid was $9.50 and the ask was $9.60, then you would only lose that 10 cents. I hope that helps. I suppose it could be a little confusing, but the tighter the spread, the less money you lose on getting in and out of the trade immediately. I don't like the spreads. So let's see what a spread looks like. An actual spread, a vertical spread. All right, so this is not horrible, right? This is a 5 wide, meaning you'll be buying the 110s and selling the 115s. See, buy, sell. And in order to do that, you'd pay $2.35. The most you can pay is the width of the spread, which is $5. So essentially when you buy a spread for $2.35, you're risking the $2.35 to possibly make the difference of the $5, which would be $2.65. So you're risking $2.35 to make $2.65. It's not going to have the same upside potential as buying a naked call. The upside is capped, downside is capped as well, and but you pay a cheaper premium to get in. I don't like the spread, so it would make for a nice day trade if it was a better setup or a better option chain. All right, VRT. Look, I already had something set up here. I don't know when I traded this, but whatever. This is the monthly, plenty of space till 3 ATR, right? The weekly has plenty of space. And the daily has plenty of space. So I like this. And then essentially I just go down into the lower time frames and look for a setup. See, when I say look for a setup, I'm saying that I want to find red dots here on the bottom. So like on this chart, the dots are green, right? So that's not a setup. On this chart, the dots are green. On this chart, the dots are red, so that's a setup. And then essentially I want to pick the stock up, buy options down here, right? At the point of control between the 21 and 34 EMA. And then after I pick them up here, I want to ride them up higher. Ideally up towards this area. First targeting 3 ATR, and then these retracement areas or extension, Fibonacci retracement extensions. So for VRT, I'm going to just set an alert down here at 141.42. Let's go to MU. MU came down some, so there might be a setup here. MU has nothing. Goodbye, MU. I think Meta had a good daily chart, right? Yeah, this is nice. You see the weekly, no. Daily looks good. 195 looks good. 78 looks good. 65, 45, not a 30, and a 15 though. So ideally I'd trade the 65, right? Yeah, 45, 65. Why the 65 and not the 45? So even though I'm looking for a really lower time frame so that I can target getting in and out before Tuesday at noon when Jerome Powell speaks, this 8 EMA is below the 21 EMA. So I don't really like that. I'd rather trade a chart where the EMAs are still positively stacked, meaning the 8 is on top of the 21 is on top of the 34. All right. So I'm going to send an alert right here around 7.72 and 70 cents. And then I'm going to make a note for myself. 65-minute chart. Because I'm looking for a day trade type of setup, I can buy this week's contracts, all right? I like these 780s. You see, there's only a 30-cent spread, 10.20, 10.50. So I'm only going to lose $30 entering and exiting this position. Because when I get in, I'm going to pay the mark, which is the midpoint, which is 10.35. All right. And then when I exit, I'm going to pay the midpoint again. But the midpoint is just $15 in between. So it's $30 total. Again, I'm not sure if that makes sense. I understand it, but perhaps I may not be explaining it the best way. If you guys had any questions about that, feel free to put them in the chat, and I will further explain in another video. I can put it in the comments or something for you guys if that's important to you at all. It's not so important to me. The main thing I want to see is that it's a tighter spread, essentially. RGTI. This is something I made a video on when the price was down here around 19 bucks. Then this thing shot up $10 and sent the options I recommended up about 800%. If you caught that move, good on you. I definitely caught a piece of it, not the whole thing, but it was still a beauty of a trade, that's for sure. Alright, so I like this. I got my trade alert. Let me see where this fib lines up. So price is just breaking out of this strong resistance level here at the 702 retracement. Alright. This gotta be a different color, man. I got the sun shining in my face. Let's make this yellow. Okay. So my first target would be about 796. We got the 3 ATR at 794.82 and 100% retracement at 796.25. So probably because 795 is a psychological number, you could probably assume that price is going to come up and tag between these $3, right? 794, 795, 796. That's a beautiful trade. Ideally, I'd like to pick it up around 772, and I'd go as low as 767, which is the 618 retracement level, of 768. So, picking this thing up in this zone. Hey, baby. And then selling it up here. Thank you. I love you. All right, so that would be ideal. My beautiful wife just brought me some watermelon. Oh, I'm excited. So yeah, this would be the buy zone. Let me just write it in here. Why not? Buy zone 767 to 774. All right. TP1, this is the first place I would take profits. About $7.95. The next place I would take profits is right up here. Well, because 5 ATR is at 808 and this is at 816, the psychological number would be 810. This would be the zone, all right? So I'm gonna say TP2, 808 to 816. All right. How do I do this in real time, live? I'll be watching this, okay? Since this is a 65-minute chart, you can see down here, it shows you when I'm not hovering down here, when I'm hovering like this, you can see in this area, right? It says Monday, the 15th, September, the year 25, 10:35. Next candle's at 11:40, 12:45. So I would actually watch these candles and wait for a candle close. And if the candles are closing one higher than the next without doing this kind of thing where it's wicking, then I would sit in it and let them play out like these. 1, 2, 3, right? If they're wicking, then I would take profits. It's more of an art and not a science. So there's no exact formula per se that I could give you guys. Dang, it's hot out here. My laptop's getting hot. I hope it doesn't overheat. But what I would say is that if you see price in this zone and it's staying in the zone, you can either take some off the table or wait to see what happens within the next candle, right? And you can find out when that is. For example, this one says 14.55, which is 2.55. So if it's 2.45 and price is hovering here, I'll wait those extra 10 minutes to see what happens on the next candle. Because if it opens up and it starts coming up towards TP2, then I'm gonna wanna take profits in this zone versus in this zone. That's more so true if you only have one contract. If you have multiple contracts, then you can feel free to just sell one as soon as it gets in this zone, sell the next one when it gets in the next zone, and so forth. TP3 is way out here at 842. However, I'm looking for a day trade, so I'm not expecting price to come up here. Honestly, I'm not even expecting price to come to TP2. I'm looking to take profits right here, about 795. I would even consider taking my position off the table around here, 788, being that this was the recent swing high area. All right, so that's how I would do that live. I'm willing to buy the position, hold it Monday night into Tuesday afternoon, but I would actually take it off the table before Powell speaks at 12:45, I believe it was, right? Let's find out real quick. Forex Factory, that's Sunday, Monday, Tuesday, 12:35. So absolutely taking profits or cutting it for a loss before he speaks at 12:35. So that's Meta. I like the, what was that? 926, 780 calls. Let me put that here. 65-minute chart, 926, 780 calls. All right, that's my setup for Meta. Was it CVNA? No. There was something that had a nice daily setup. What was it? Oh, it was Amazon. There we go. Yeah, this is beautiful. This is beautiful. So why do I love this? Why do I say it's beautiful? Okay, so we have the structure, right, that I love. This bullish pattern. Price is coming up. We got this. I don't know what it's called. It might be called like a wedge or something like that. I essentially call all my bullish patterns bull flags. Even if they're not bull flags, that's what they look like to me. It looks like a flag, right? Price comes up, it makes that shape. I'm calling it a bull flag. Not only is it a Not only is it a bull flag, we got our squeezes down here, right? We got our red and orange dots, and price is essentially right in the buy zone. So this red line coming across is called the point of control. It's part of this volume indicator, the VRVP, the visible range volume profile. And essentially it shows where most of the buyers and sellers are positioned, okay? So this zone here, that's where all the buyers and sellers are positioned. That's where most of them are. That's the heaviest concentration of buy and sell orders. And this is essentially 231 and 48 cents. All right. So I'm happy buying at the point of control. However, this would be my buy zone. All right. So this is 226 to 231. Buy zone. What did I say? 226 to 231. Okay, that's my buy zone. I would stop out. My stop loss would be under 225. Okay, so stop out on a close. Under 225. When I say a close, this is the daily chart. So that means at 4 p.m. or honestly, you could do like 3:55 to not take the risk into the next day, right? If it's 3:55 and the price is hanging out at 224 or 223, then I'm closing it out and calling it a loss and moving on. All right, so stop out on a close, a daily close, because this is the daily chart. Let me write that here just in case somebody's watching this on mute. On a daily close under 225. And then my target, my upside target, I'm going to use this fib retracement, right? Fib retracement. And I'm going to take the all-time high or the 52-week high, which is not here. This is 236.53. This is 238.85, so I'm taking this one. Let me put the magnet on. And then I'm gonna go to the lowest swing low after the all-time high, which is down here at 226.29. That brings up my fib levels. All right, so my buy zone, again, between 226 and 231. My first TP, or take profit, is going to be up here at 235. Okay. Why here? Because this is the major point of resistance here. You see, if I drag the box over here to the left, this is where price was rejected once, twice, 3 times, 4 times, and then it finally broke through, and 5 times. So it's a high probability that price gets rejected from 235. So if I'm getting in down here at, let's just call it 229, that's a $6 move. With options, that's plenty of profits. Plenty enough for me anyways. All right, let's just imagine I get in at the halfway point. My stop is going to be 225, and TP1 is going to be right around here. So risking about 1 to make 1. If price breaks out of that, my next target would be up here at the 100% retracement level, which is basically the same all-time high that it made. I would get out at a retest of that level, which is risking $1 to make 2. And then the next area I would want to get out would be up here at the actual extension, the 1272, risking 1 to make 276, which would be a $13 move, a $9 move, or a $5 move. Okay. Now I want to zoom in to see which one of these charts I would actually play. So there's squeezes all over this thing, right? This thing is squeezing on the 15 minute, on the 30 minute, on the 45 minute, on the 65 minute, on the 78 minute, on the 130 minute, 195 minute, on the daily, on the weekly, and on the monthly. Is it squeezing on 3 months? No. So this thing is squeezing everywhere, okay? So what that means to me is that there's so much energy built into Amazon right now that it is going to make a move, and there's nothing anybody can do to stop it. I want to put a fib retracement right here on the 3-month chart just to get a visual, oh no, on what the next target would be for the big chart. So I'll be up here at 254. So I want to zoom back in, put my fib retracement back on, and look, that'd be up here over TP3. This is TP1, TP2, TP3. This is at 5 ATR on the daily chart. So 5 ATR on the daily chart is the next target on the 3-month chart. So what does that mean? That means that by the end of this year, the end of this next quarter, right? October, November, December, 3 months, that's the next candle. Price will likely or could likely be up here at 255. So if you are a leap trader, if you like to buy the stock, all right, these January calls, you could catch these 235s or 230s. Honestly, you could even buy the 255s, being that price will likely, if price moves in that direction, price will likely get to this number as a target, 255, which would put those calls at the money, and they'd be worth a good amount of money. Anyways, that was my in-depth weekly chart analysis. I really like this pattern. They beat earnings. This is an actual bull flag. It's an actual bull flag, ladies and gentlemen. It's an actual bull flag. We also have positive momentum. These light blue bars are positive. These dark blue bars are positive and going down. The red bars are negative and going down. And the yellow bars are negative and going up. So when you go from red to yellow, that's your first positive shift in the trend. And being that this beautiful looking bull flag, I really like this chart a lot. Because I like it a lot, I'm gonna do a setup on it. Wow. So for me, this is like picture perfect, all right? So I'm happy to pick up either up here at 319, 320, or down here at 317. If price comes down to 317, I'm gonna play the 195. If it only comes down to 319, I'm gonna play the 130. So my note to myself, 130 or 195. Charts both squeezing. Okay, if I play the 130, my stop, it's gonna be on a close underneath this pattern, so 317. Let me show you the, all right. So once price moved up into this pattern, it's been in it. So close under 317. So 130 minute stop, close under 317. And on the 195, close under 3. Oh, under 315, I will call it. 195 minutes stop, close under 315. And the cool part is the upside target essentially will be the same for both charts. So I'd want to get in down here. All right. Buy zone 316 to 320. All right. And I'm targeting up here, move to 325, 702, 329, 100%, and then 332. Let's look at these contracts. ADSK. I'm looking for a day trade again. So actually, I didn't even think about that. Let me see if there's a shorter time frame squeeze. Oh, this is beautiful right here. So for my Tuesday play, I would actually want to play this 45-minute chart. So let's set this up, guys. Let's set it up. My ideal entry would be between basically I would say 322.50 and 321.50. So 321.5, 322.5. Entry for 45-minute chart. All right. All right. A desk. These 926 options. All right. So this spread is not. It's not great, right? It's was that 55-cent spread, but this is a $322 stock. So stocks that have a spread like this that are hundreds of dollars, that is okay with me, right? If this was a $50 stock, I would not be trading that spread. All right. So just for reference, funny enough, I'm just noticing now that all the stocks on my watch list are hundreds of dollars. So the spreads are, they're going to be a little bit spready. But if you look, right, Meta is so liquid that, right, 30 cents here. This one's $1. This one's 40 cents. Just for reference, right? I think Meta's going to split soon, by the way. I don't think they've ever had a stock split. But being at the fact that the stock is pushing up towards $1,000, I think they're going to have a stock split soon. This is just my own personal thoughts. All right, here on ADSK. So ideally, you'd want to get these at the money.
Oh, no, don't do that.
These 325s. Let me put them on my option watch list. All right.
No.
Keep them over there, please.
Right.
That's my son, guys. He's got water balloons because we're outside. But I got my computer out here, and, he's a wild one. So I got to keep him away. Otherwise, he'd end up throwing a water balloon at me, soaking my computer, my microphone, my cell phone. I would be in tears. There's nothing to do to get it back. All right, so I like those 325s. I also like these 330s. They're a little bit out the money. And the spread is, I think, essentially the same, right? 95, 05, 15, 25, 40 cents. So it's a 40-cent spread. These are 50-cent spread. But I think these 330s would have a higher percentage gain because of the fact that they are further out the money. So I like those both. I'm definitely going to be looking at these this week, Monday morning. I really like this 45-minute chart. And, of course, the bigger one, right? The 130 and the 195. This 195 chart is beautiful. All right, guys, that's what I got for you. I hope this helps. Have a good weekend.